Hey there, welcome to the show. So I hope everybody made it through the March break. For those of you that have kids in private school, just kind of finishing up and, yay, tomorrow is school day, send them packing. Anyways, a lot to talk about this hour. I've got a great show planned for you. That's right, because guess what? It's time for the Real Estate Talk Triangle, and I've got my two panelists back in studio with me. I've got Dave Butler. He is the broker owner of BM Select. He is also a snowboard exceptional, I'll call him. And then I've got Tim Sirianos. He is the broker owner of Remax Ultimate. He's also a former president of the Toronto Real Estate Board, as well as a former director at the Canadian Real Estate Association. So they're going to be joining me in a minute. And hey, just again, a heads up. You know what? The runway's getting shorter. Coming up on Thursday, April the 27th, I've got that simple seminar coming your way. Don't forget to sign up. It's going to be an incredible evening. You can join us here in studio, or you can join us via a webinar, but do have a lot of things. We're going to try to unpack on how you can deal with some of these financial stresses you're going through right now with these increased interest rates. And then on top of that, I have a very, very special limited release. And no, it's not where we've been doing it. We've got a new location, new property, and it's going to be really exciting. The only way, though, you can find out about it is joining us during the seminar webinar. So looking forward to that. Don't forget to follow me on Instagram, The Simple Investor One. So, one of these days, I'm going to get my producer, Aiden, to create a ding ding bell like we've got some kind of like match going on, because we do have a triangle here. And so let me bring it in. Dave, Tim, welcome back.
Always great to be here.
Yeah, this is always fun.
Yeah.
So, Dave, I'm just going to dive right into it. You and I got a lot of traction from last week's show. We also did some posts here. Huge thing about the U.S. Fed. We know they're full of BS. And again, taking a look at the big picture this week. Tell us how you think it unfolded. I mean, I think you nailed it dead on. And, if people want to go back to our clip from last week, they can take a look at it. But I think you pretty much called it.
Yeah, well, with U.S. Fed, I mean, we remember that before all the Silicon Valley Bank and everything else, it was, dead set. It was going to be a 0.5 point increase, all that fun stuff. Silicon Valley Bank, banking crisis kind of comes in play. Then the markets had started pricing in a 0.25% increase. And there was a small outside chance that there would have been no increase. I think, we talked about it on the show last week. It was, if there had been no increase, I feel like that would have absolutely just been such confirmation for the bond yields to start moving in the direction that will force the banks here to actually lower rates. But interestingly enough, the 0.25% increase actually did have, normally it had an impact. And what I mean by that is normally if what's supposed to happen happens, you won't see a lot of activity in the bond yield market, right? Again, bond yields are tied more to the fixed rates in Canada. Well, yesterday, the expected move happened, and we actually saw a very negative reaction to it. And for obviously those looking for lower rates, that's a positive reaction, because we saw the bond yields drop quite a bit. We saw about a 6% drop, and it seemed like it was unexpected because it was really hanging around the -1% for about the day. As soon as that 2 p.m. hit, I literally I was watching my TradingView app, and I just started seeing down, nice red number. And we want that. I mean, for lower interest rates, we want that. So again, very interesting. The reaction to the news generally is what you want to see. And we saw that. We saw the bond yields start to make a move downwards. And even as of the day after, we already saw that they didn't actually rally too much into that weakness. So we got some interesting stuff coming up in the next little while for sure.
Yeah. And to touch on that, so the U.S. Fed also announced the chances are they're either coming to the end of increases or perhaps looking at putting it into neutral, sort of what the Bank of Canada did. Now, again, a reaction to what they've done, everybody that's been taking a look at it from a financial perspective, they're saying that means Bank of Canada is going to stay neutral for the next meeting. Would you agree?
Yeah, I think that's the signal. I mean, the price action kind of says, hey, U.S. Fed came out with their regular, what they said they were going to do, but the reality is the language they used was quite interesting, in that it really looks like Canada may have hit the pause button at the right time. I mean, I think we all can agree maybe they should have hit it a little earlier, probably should have started the raises a little earlier, but I think that we belabored that point to death. But yeah, I mean, it's very interesting to see the reaction yesterday, the news, the press release, Jerome Powell up there, what he talked about. Didn't really seem confident that there would be a lot of raises coming up. And if anything, to your point, I think there's a pause likely on the horizon there. And I think that bodes well for us here in Canada.
Yeah, we're definitely not flogging a dead horse here, Dave. I mean, we can turn around and beat up the Bank of Canada all we want. I mean, 'cause it's completely full of it. So, anyways, not to worry. So Tim, taking a look at the real estate world, obviously, there are. I know you follow, obviously the trend setting situations. You watch the Fed, you watch Bank of Canada, as a prudent broker owner. Not all realtors really have a good grasp of it. I hope most of them do, but there are some that would question this. So again, let's just kind of dive into it. So when you get a bit of a pause or almost a pause out of the Fed, we get a pause out of the Bank of Canada, as Dave had alluded to, we look at the bond rates. So maybe you can help our listeners understand that where we get the fixed rate mortgages and where we get the variables.
Well, it's really interesting because on my way into the studio, I was actually thinking to myself, what a great opportunity to actually talk about the headlines and talk about the Bank of Canada, talk about all these media reports coming back, coming at us so many different directions and angles, and how much confusion everybody is actually, having right now at this point in time, right? Is there a pause? Isn't there a pause? What did the bank, the Silicon Valley Bank, impact on the real estate market, even in Toronto, not just Canada, but in Toronto specifically, right? So, I mean, it's a great tie-in to what Dave and you are sharing with me right now. We used to be able to predict as a real estate market maybe 2-3 months out, but now it seems like it's a week by week basis on what's actually happening right now. You have a 40% drop in sales, but you've had a year over year. Let's make that very clear. But, people are asking me that question. I'm saying, well, there's a 5% increase in sales, from last month to this month. And then they're saying, well, there's a 27% drop in values. And I'm saying, well, there's a 1% increase in values from last month as well. So we need to be very careful when we're looking at, I don't want to call it day trading, but, looking at the media reports and looking at the numbers. What we're seeing right now is that people are actually seeing the marketplace as not wanting to miss the opportunity. They're saying, okay, there's been a pause in Canada. Maybe we would have seen an increase of another quarter point. Now we're not going to see it because the Feds are actually saying that they're in that, pause environment right now too. We're seeing the CPI change on a monthly basis. There's no question we're going to see it change even more so next month. So this pause is very smart. And what we're seeing is a breath of fresh spring air coming into the marketplace right now, where you're seeing a lot of people. And again, not every neighborhood is the same. Not every area of GTA is the same. But what I can report to the three of you and everybody listening is we are seeing more and more people not wanting to lose their opportunity. They're seeing that, okay, this is it. Time to, really educate myself and hop into the market. And we're seeing a lot more traffic out there.
Yeah. Dave, Tim made a lot of good points, and one of them obviously is treating real estate like it's day trading, right? And you and I talked to Bryn about this before, and we had Lisa Patel on the show, and same thing, talking about the fact that people have started for a little while there they were trading real estate. And now that we see numbers fluctuating all the time, but truth be told, right now, if people can turn around and look more long term, right? We all know here at this table that the fact is that interest rates are going to come down. They cannot stay where they are. Interest is going. The inflationary numbers are going to come down. We know that, and this month's definitely shows that they're on the downward trend. The Bank of Canada said we need to get inflation under control. You have, so forget about going up. Maybe we'll see some downturn. But the whole day trading aspect of real estate, I mean, you've seen it, and obviously people are coming to you saying, "Hey, what can we do, Dave?"
Yeah, I call it fast money, right? I mean, that's the guys that when the opportunity exists, they're going to enter the market. Now, they're not long term. They are, hey, there's an opportunity here for me to buy this, do a little cosmetic work to it, and flip it and make my buck. And we all know, everyone knows someone in their family maybe, or a friend that's that guy or that girl, whatever. But this market is not conducive to them operating well. And so when we see the exiting of the fast money, that's always the first money that's going to leave. Another aspect of fast money is going to be people that are buying those new constructions really just to assign it down the road. Again, that's not, to me and all of us, a long-term or even a medium-term investment strategy with real estate. That is looking at a fast and a opportunity that's presented itself at that time. That opportunity is not there right now. The cost to do, to buy a place and then cosmetically fix it up and then sell it, it's risky. Are you going to even make your money back that you put in? So we've seen the exit of those people, which is great. And to Tim's point, we're seeing more of the long-term investor has been coming back now. And I don't want to say coming back because they've been there for a while, but they've been sitting on the sidelines very patiently. And I think the bulk of them now are starting to, as you said, Tim, just kind of get out. We're seeing a lot more, we're seeing even more purchase agreements. I don't want to say we're seeing a lot, but I mean, when you look percentage wise, and again, I don't think a couple of weeks makes a trend, but I think we're starting to see slowly the tide turning a little bit.
So Tim, you'd say window shopping, wouldn't you?
Well, yeah, window shopping. It's interesting because, our industries are so kind of married to each other and there's like a chain link fence, right? So you're looking at, people approaching a realtor and then we send them to the mortgage broker and they come back to us and we go out and then you see the purchase agreements and then the lawyers, they see it 2 and 3 months after that, right? So if you talk to a lawyer right now, they're saying, I'm not seeing anything right now. But you're talking to Dave and his industry and you're seeing it and then you're looking at ourselves. There is a lot of people, and I want to kind of step away from the word investor right now, or people who are coming in. I want to say that the end user, the people who are looking at moving up, moving down, moving sideways, for whatever the reason may be, they're actually the ones that we're seeing the most. Right. In the investor market, people who bought the pre-construction, properties, 4 or 5 years ago, and are coming due. Yes, there are some people who are in a place that they shouldn't be right now, but there is so much demand in that market that they're being gobbled up and we're not seeing, a drop or a risk that we should in any way be concerned about.
Yeah. Great point. By the way, folks, we've got a lot to talk about today, a lot of hot topics. And so we're going to come right back with Tim Sirianos and Dave Butler. And don't forget, if you haven't signed up for the Simple Seminar coming up on Thursday, April the 27th, do it. Go to thesimpleinvestor.com. And when we come back, we've got more. So stay with us. We'll be right back after this. And welcome back. So in the studio for the Real Estate Talk Triangle, I've got Tim Sirianos, broker owner of RE/MAX Ultimate, former president of the Toronto Real Estate Board, and former director at the CREA. So CREA is the Canadian Real Estate Association. And of course, I've got Dave Butler on the other side, and Dave is the broker owner of BM Select. Just before the break, we were kind of hammering away at the U.S. Fed, and if you catch any of my posts, you know what? They're full of it. They've really done a number on people, with the increases and everything else. And, there's a bit of that punishment feel. And I think the Bank of Canada was kind of following suit, as a little brother that always follows around big brother. And, we're at this point now where we're starting to see all the cracks coming up through the armor. We know that inflation's on the way down. Yes, their measures. Did it work? Yeah, they're going to pat themselves on the back. That's the problem with this. Dave, I'm going to go to you on this. I hate it because they're not right. They're making people suffer. They're making industries suffer. They're making businesses, take on more debt than they need to. People were turning around. They kind of fooled us saying, hey, we're not going to increase interest rates. But now in the end, what's going to happen? You're going to get the Bank of Canada. Tip Macklin's going to sit there and say, look, we were able to control inflation. Look, we did it in, 12 months. Hey, screw you that we affected, but look at us. We did our job.
Yeah. It'd be, I know if I was Tiff, it'd be tough to pat myself on the back knowing that, I said that inflation was transitory and that I told Canadians and everyone else to, go out and make big purchases and everything else and spend lots of money because interest rates are going to stay very, very low for a very, very long time. So, yeah, I think that'd be tough to pat myself on the back, but no doubt they will for sure. But yeah, as far as the inflation stats go, we even had a nice chat before the show, but I truly believe they're going to hit their 2% target well before they had even, thought so. I think, they had said they want to have it down to about 3.5% by the end of this year. And then they think they'll get it to 2% by next year. I have a feeling we end up, obviously next print, being the March print. So that'll be released in April. I have a feeling we end up with a 4 in front of it. We went from 5.9 to 5.2. I think it's very conceivable to end up from 5.2 to something with a 4 in it. And I actually think if you really do a bit of a deep dive within the numbers, I think there's a good chance we end up even in the low to mid 4s, which would be, when you really look at it, May, June, July, and August should actually be the months where we see a really big percentage decrease because that's comparing to the peak of last year. Right. So, reality is setting in. I think that, maybe that 2% target is hit a little more premature, which the reality is I think that goes back to what we said. You guys raised rates too quick, too fast. This was aggressive. It seemed irresponsible, and that you will have to at some point pivot. And then all the bears would come out and say, you guys are crazy. Canadian real estate needs a hit, blah, 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 blah. No, I mean, we just look at data. I'm just a data guy. And the reality is you put that type of pressure on interest rates into that type of inflation where it's also a lagging indicator. You're going to have results like you're seeing now. So
yeah. So Dave, I'm going to have our producers, just so you know, they're going to earmark this part of the show, guys, because you know what, we're gonna call Dave out in a couple months, and you know what, chances are he's been right, because he's been right a lot along the way here. Tim, it's interesting when we talk about real estate in itself. You'd mentioned earlier that we're starting to see some ripples in the market. We're starting to see an uptick. Obviously, there's this pent up demand. But here's the thing. We're looking at some numbers. The number actually came in that we've got 1 million new people. Like if it's workers and new immigrants, we've got 1 million new people this year. I mean, that's a big number. People got to understand supply and demand. Like, all these people that are they're sitting there with bated breath. Like the government thought that if they increase interest rates, they're going to push that price down on that real estate. And yet there's no inventory added.
So here's a headline that you can look up very easily and quickly. 19,000 approvals for purpose-built rental units, and only 1,700 have been built so far.
I know that was
so,
staggering.
I mean, there you go right there. I think the number one question is why. Why? And part of it is the interest rates. Part of it is supply. Part of it is being able to find labor.
Hang on, pick me in the corner here.
Yeah.
No, but okay, but who was going to build the 19,000? See, there's the thing.
And as I mentioned, right? Yeah, like how are you going to do that? Like,
well, if you're asking government to build, I mean, there's no way they're going to build. They just can't. I mean, so you need to bring in the private sector. In the private sector, they're not giving them enough incentive to do it.
And when you're hearing reports that if an election happened and you reintroduce rent control and you introduce to the new units and you start looking at kind of messing things up, right? Like, why would the investor actually come into the market and build purpose-built rentals if there's no return on the investment? If it's just too cost prohibitive to actually build them? We need the private sector to come to the real estate market, right? Supply is the number one, is one of the biggest drivers to what we're seeing right now. And values, that dropped in the last year have no relationship whatsoever to unemployment. Have no relationship to past recessionary periods and times. The reason why values have gone down in the past year is only one reason alone. Interest rates went up 8-9 times, right? So for the people who are looking, or as we said earlier, window shopping and looking at the, in the market, they're realizing that there isn't much to look at. And that is a very, very big problem. And that's why right now, and I said it last time we were here in the studio, we are seeing like 6 offers on a property, 9 offers on a property. We've seen as many as 29 offers on a property, right? Yeah. And these are the types of houses that are completely move-in, because the interest rates are so high that they can't get secondary financing to actually, purchase the home and then actually renovate the home. So, again, there's a lot of, fresh faces to the marketplace right now. And we're not talking about the investors. I'm talking about people who legitimately want to enter the market. 26% increase? Here's another stat for you. Let's throw stats all, hour here, right?
Okay, well, we can do that. And so I'm going to throw one at you.
Yeah.
So increase in rent, $400 per month from last year.
Correct.
Okay. So Dave, I'm going to have Dave weigh in on the cost of borrowing though, because it's not going to overtake that $400 increase. In fact, I think on the average mortgage, I mean, you're probably up $1,000, right, Dave? If we're taking a look at some of these numbers. So even if somebody is an investor, and of course we always talk about these greedy investors, they're in worse cash flow, even though it's gone up by $400. But Tim, this is one of the things, and you have a massive inventory shortage in investment real estate.
We have a massive inventory shortage in the rental market, and we have a massive inventory shortage in the resale market. And we have a massive inventory shortage in the new construction market. And I'm not talking about pre-con condos, because there are condos coming to market this year. Many of them are coming to market. But, as we've discussed maybe in the past, the type of quality of pre-construction condos that are being built, being 400 and 500 square feet, are not the type of product that we need in the marketplace to have, people move, right? We need larger units. So, I'm getting phone calls right now from Stratford, Ontario, where investors, builders are looking at building, small condos, and the market there said, don't even bother. Like don't even think about it. And they've gone from 600 square feet to as much as 1,200 square feet right now to attract the end user. So it doesn't work. Like one size does not fit all.
Yeah.
And that just demonstrates that we have to be very, very smart in what we're approving and building.
Yeah, Tim made a boatload of good points there. Big thing, Dave, about the condos, and obviously, you deal with a huge, massive investor base. A lot of people, I think, are recognizing the fact that we need to build bigger condos.
Yeah, there was that, great point in that, there was this rush of, let's get the 500, 600 square foot, because it became, in the mania, it became a thing where, hey, it sounds like as a builder, all we got to do is just put out some small amount of square footage and it's going to fly. The reality is we saw that it's leaving. As much as, it's nice to have those small 1 bedroom in the den type situations, because there are certainly situations that need that. We know that, but there felt like a big lack of purpose-built family stuff, right? Like, 3 bedroom, you've got your mom, dad, and then you've got, the 2 kids in there. It seemed like that because from a number standpoint, it was quicker for them to build it and get that 500, 600 square foot out the door and into the mania. Now you're seeing a different and a more measured approach. If I'm a builder, in this environment currently today, it's not just throw it at the wall and let it stick like it was for a while there. You got to really strategize and figure out where, and it's funny you bring up Stratford, because it's like, yeah, why would a builder be wanting to build massive, like 500 square foot place in Stratford? I mean, doesn't even seem like a town that necessarily would be akin to that type of thing. I mean, that seems more of a family type, city. So interesting that you brought that up.
Yeah. And it's funny because we do have properties out in Stratford area and that whole area. And I can tell you, the things that rent out the best are 2 and 3 bedrooms. And I mean, 900, 1,400 square feet. They are huge in the marketplace.
Yes. Yeah.
So folks, hopefully you're enjoying the show so far. I am going to bring Tim and Dave back after the break, and looking forward to, more of a fun discussion. And don't forget to follow me on Instagram, The Simple Investor One, and you can catch some of our show because we put some of the clips up. So stay with us. We'll be right back after this. And welcome back. So we've got the Real Estate Talk Triangle this week, and my panel guests, as they are every single month, joining me, we've got Tim Sirianos, broker owner of Remax Ultimate, and he is also the former president of the Toronto Real Estate Board, as well as a former director at CREA, and Dave Butler here from BM Select. He is the broker owner there. And Tim, just a quick shout out, Remax Ultimate, right in the hub, right in the thick of things, fabulous group of agents. You've been a great leader. I catch a lot of posts for the company. You got some top producers there. Definitely kudos out to you guys, because you are repping the industry fabulously. But more importantly, you also only deal with professional agents. And, one of the things that, you and I can talk about, obviously, is professionalism in the industry. Recent announcement, April 1st, they're getting rid of the NDA. And, you and I talked about this before, give me a break. Like it really hasn't been a thing. And now all of a sudden they're making this big statement that the NDAs are no longer.
Yeah, it's interesting. The NDA, for everybody listening, is a non-disclosure agreement. If there's a settlement between, say, a realtor and a consumer on a complaint, or something went wrong with the transaction, that, okay, we agree to settle, but you're going to sign this NDA and not complain to RICO or publish it. And, what's really remarkable is that that's never been something that was allowed to really do, but it just wasn't law. So, they've announced, they went to the court and they went legislature, they announced that effective April 1st, not April Fools for any other reason, that you can no longer do that. But, it's remarkable that, agents or brokerages or anybody in the industry actually thought that that was a good way of doing business, to actually tell somebody, sign an NDA and we'll settle. I mean, if you're guilty, you're guilty. Let it be published. It is what it is. You learn from it. You move on. Right. So I'm to me, it's always been there. I never even thought of, luckily I've never had to be in that situation. I'm going to say that, openly.
Yeah.
Thank you for the nice words. We do everything possible to make sure that we lead with reputation, right?
Of course.
And but it's a good thing, make it public, let people see what you should not be doing.
Yeah, no, and this is one of the things that, I think, and Dave and I had talked about this the other week, but, big, person about professionalism in the industry. It's the only way an industry can survive. And when you get some bad players, they make a bad name for people. You can't paint the brush with everything. But in a case like this, like I said, I think some of the governing bodies, they just want to sit there and say, hey, we're doing something about it. And it's like, okay, look, okay, we'll pretend that, and we'll give you a little pat on the back and say, okay, thanks so much for taking care of that issue. But I think it's also, it's already in place, and I don't want people to think all of a sudden, oh, this is new. No, it's not. But as Tim said, and again, can't have a guy with more experience sitting at this table than Tim when it comes down to real estate. Dave, I do want to switch gears for a second. A lot of words being made around the idea of some of the private lenders. A little bit of stress out there in the marketplace. Taking a look at, they say private mortgages have risen 72% in Ontario. It seems like a pretty big number. Is this people because they can't facilitate, the mortgages from the top 8 lenders, or where was the rise from?
Yeah, I mean, obviously it depends on where the data points that we're starting and ending, but certainly I would say in the last, I would say since last summer, we saw an uptick in private mortgage usage, right? And I think that just comes down to, the stress test, everything else. I mean, it just got very hard and still is quite hard to qualify with the A lenders. It's even difficult to qualify with B lenders these days. B lenders have even had to tighten up the ship a little bit. We're getting asked for a lot more documentation. They're really underwriting the files a lot differently. They're underwriting in what, I would expect in, a quote unquote bear market as a lender you would want to do. And that obviously leads to more people who can't now get approved at the A and the B lender, having to look elsewhere. And that's going to be private lending. Where I get scared when that type of thing happens is that this mania that we went through, the uptick, it showed one of the things to me was that there's a lot of people that were looking to place this newfound equity in other places. They'd heard about private lending. I'm going to get into private lending. And we were seeing some really nasty deals. And what I mean by a nasty deal in the private mortgage world is a deal where the lender is exposed, meaning the lender has lent money on a property where if for some reason something was to happen, the borrower couldn't pay, the lender would actually have a tough time getting their money back. And we saw this kind of reckless abandon, 90% loan to value second mortgages. Like, I come from mortgages. It's in my blood. When I'm learning this in my early 20s, there is certain rules, and that is you never entertain a second mortgage past 85%. There's just certain rules you have to employ. And to see those rules being thrown aside and seeing the reckless abandon, it was scary to me. So there's that aspect of it. And so I have a little bit of a situation where you're going to see possibly some private lenders who shouldn't have been lending in situations, likely in bad spots right now, depending on how the market gets, whether the borrowers can pay or not. That could lead to some things. And then on the other side, do we really want borrowers borrowing like a high percentage, like you said, 72%? Why do we don't really want to see an uptick? I mean, private mortgages are really there. They should be Band-Aids. They should be short-term Band-Aids. You shouldn't want a Band-Aid on for a long, long time. It's just something we don't want to see, but the uptick is definitely, it makes sense to me. But obviously the hope is that when we get a bit more affordable interest rates, maybe that elusive 3.99, that we see less. And it would be interesting maybe coming back in the summer and seeing statistics on whether that number has actually dropped.
Yeah. And, you touched on this, which is great. So right now they're saying about 20% of Canadians are taking a look at mortgages where they're actually not really paying any equity off because interest rates have gone up. Right now their payment is actually putting them in a little bit of a negative position. So they kind of have to top it up just to make sure that they're staying in with the interest rate. But, Dave, that's indicative of the timing, of course, because, if you and I talked about somebody that took a mortgage right now, November 21, man, and they went 5-year fixed, they are cruising for the next 4 years. Like, they're in great shape, right? And this is one of the things that I think people have to realize, that there are some people that are going to suffer a little bit, okay? But to start painting the brush, because here's the problem, is that all of a sudden, again, looking at our headlines, because we get them all the time. I know our producers give you guys the headlines and say, hey, here's some talking points. We go off on our own tangent. Sorry, Ian. But, big picture stuff, when we take a look at those numbers, is like, well, what did you expect? Like this is a little bit of reality coming forth. So, using a little bit of that extra equity, as you and I've talked about, Dave, that leverage to last kind of thing, maybe utilize a little bit of your equity to help continue on that platform.
Well, it's to your point with regards to the leverages, we actually had situations where we had you know, a couple people lose their jobs. So we would get calls sometimes, you know, wife or husband has lost the job. They're not in a panic today. But the problem is if they've lost their job, we won't be able to refinance them. If they're looking for any extra little cushion, it's hard to get them approved because they're not approvable. Well, on the flip side, that's how some of these private mortgages were now increasing, because private mortgages, a lot of people don't realize, a lot of them are interest only payments, right? You can actually set it up where it's just an interest portion. You're not paying off the principal, which obviously helps affordability. So we actually had people taking out small mortgages because they felt it was a cushion to them to just have that money in the bank while they were still looking for the job. Rates are going up because they could see the aggressiveness, and just giving them that cushion. And I didn't think it was a bad thing. I mean, at the end of the day, you want to always put yourself in a situation where you're not having to sell your home when you don't want to sell it. Yeah. And I think there's nothing wrong with it.
So to provide some perspective here, right? Because I'm in a different trench than everybody else.
Sure.
And I see things from a different lens sometimes. So, last March we entered a tunnel, right? And when you enter that tunnel, it gets darker and darker before you see light again. So I see these private mortgages as well. I've seen some of them interest only, great, thank you for touching on that interest only, part of it. But now I'm finding that people who've held on and have decided not to participate in this market, the big question is, how much longer do I have to wait? Well, now it's okay. It's no longer the darkest part of the tunnel. Now we're saying, okay, it could be, we don't even say months. We can say it could be 3 more payments. It could be 7 more payments. It could be 5 more payments, because you want to provide the right perspective.
Yep.
So people don't sell their house at the wrong time, right? And don't make a decision based on a knee-jerk reaction, right? So now we're months. How many months of payments are you going to be in this, so we can eliminate that interest-only, mortgage, or, look at the marketplace of where it's going to be? Because now we are talking about August, September, October, based on, and I don't think that, not to go away from your prediction, I don't know if 2% is a target anymore for inflation. I don't think that they'll wait, for 2%. I think that, don't be surprised if we're in the high 3s before they totally back off.
I hope.
So I mean, but that's just, what I think.
Yeah. No, well, you know what? It's a good point. So, let's see if Tim or Dave are going to be right about this. And of course, we've got them on tape, so we'll be able to find out. Folks, we're going to go to a quick break, but when we come back, I'm going to have more with Dave Butler and Tim Siriano. So stay with us. We'll be right back after this. And welcome back. So we're in the home stretch here at Simply Real Estate, and it is that real estate talk triangle that we've been doing all hour. Tim Siriano is joining me. He is the broker owner, RE/MAX Ultimate, former president of the Toronto Real Estate Board, as well as a former director at CREA, the Canadian Real Estate Association. And I've got Dave Butler, and he is the broker owner of BM Select. And when he's done there, he's going to end up being a snowboard instructor out west. So I'm going to go visit him there for sure and get some lessons. But anyways, guys, so interesting stuff in the news, all week. Obviously, we've been touching on a few of the topics. Tim, I'm going to throw one at you. Josh Matlow announces a run for the Toronto mayor. Of course, there's a lot of people throwing their hats in the ring, but really, do you think he shoot himself in the foot by planning on increasing property taxes right out of the gate as a platform?
Well, I don't know if I should stay totally neutral right now and say good luck.
That's pretty good.
I really did not expect to have any person come out and run for mayor and talk about a tax increase. Yep. We are talking, let's remind Torontonians that, we had a double realty tax increase, just recently, it increased by, I think, 4 point something, then added another, point something. So, I mean, I just do not think that's the way to go.
The no-fly zone.
Yeah, it's a no-fly zone at all, right? But look, there's going to be some pretty interesting candidates, in the race. This is going to be, an interesting race, and great. Hopefully, there's a lot of great debate, during this campaign, and hopefully, Torontonians pick the best person for the job.
Yeah. So I am going to throw a shout out to some of the candidates out there, and I'm going to give you maybe a little tidbit here and maybe some advice. But previous mayors in the past have talked about Toronto community housing, and they were given huge budgets, and yet no construction was basically done. I mean, there's 20,000 units right now that could really use some renovations, and renovation's a lot easier than building. And yet, the sheer volume and numbers, I think maybe 100 units got done in 1 year. And I kind of sit there stymied because, we know contractors that can knock that out in no time. Why is it that you've got a massive, hundreds of millions of dollars in budget, and yet Toronto community housing, something that's very, very important, by the way, to the city, is not actually, dead set in the middle of the bullseye here. So again, throwing that out to the candidates, because what they need some help there. They definitely need, and it's not just like, don't throw money, throw results. Okay, it's just like when the provincial government sits there and says, "Hey, we're going to build 1.5 million." As my panel and I, when we got up off the ground, laughing our butts off on that one. Like, give me a break. Okay, you can't build 10,000 homes a year. How are you going to build 150,000? So let's call a spade a spade. How about a candidate gives us some real numbers? Dave, speaking of real numbers, I know you're a cottager. I'm a cottager. Tim, you like the Mediterranean, so that's not a cottage. But so let's throw this out. So,
I think it is, but anyway.
Look, a cottage is like 3 hours in traffic. Okay, so but the trick here is, Dave, that they're talking about a big decrease in cottage prices, and because there was a huge run up during COVID, of course, everybody decided to escape. Cottage rentals went through the roof. I don't necessarily agree. I think a lot of people that went into the cottage market, with their families for the first time, have now recognized the value of it. I'm a lifetime cottager, so are you. We take a look at the big picture and say to ourselves, why wouldn't you want your kids to put down the device, go out, go for a swim, sailing, canoeing, whatever it is, whatever you do at the cottage, just get out in nature. I don't agree with the predictions.
Yeah, and I mean, it's also coming off the heels of, again, mania. We were locked down. We were told, you can't fly places for a period of time. So people were rediscovering, their country, their province, if you will. So, the uptick in cottage was probably a little unnatural, but certainly falling in place with what was happening at the market at the time. And I also I'm very curious as to real estate stats for cottages in Ontario in the winter, because the reality, it's very, first of all, no one wants to drive and look at cottages. I mean, no one's like, hey, I want to call up my realtor, drive 3 hours in the middle of winter and go and look at a bunch of cottages, half of which are actually closed down and they don't have running water yet because they're just completely shut. So you really got to take, cottage sales stats, and we all know this, with a grain of salt in the winter. It's the summer. I'll be interested to see what the numbers are. But again, I think it's just great headline stuff. I think it's great for the people that are writing the headlines because it looks good. But the reality is, if you do a bit of a deep dive in it, it makes sense that we're not going to see the same craziness. But to your point, look, cottages in Ontario are going nowhere. Okay, there's no new lakes being manufactured. So when you've got waterfront property, you are sitting on something that, as they continue to increase the population here in Ontario, there's gonna be more people that are going to demand and want to go and experience that. So if you're holding on to that property, you probably don't want to sell it, and that could obviously be another factor of why they're seeing sales numbers down, because a lot of people are not going to want to sell their cottage. I can sit here and say, even if I wanted to get a different cottage, I would not sell my existing cottage. It is too lucrative to have as a short-term rental, medium-term rental, or even a long-term rental, because supply-demand, as we talked about earlier, just does not bode well for getting rid of that.
Yeah, and especially if you're trying to build in cottage country. I know a lot of people, Tim, you've been going through, some builds for different aspects of your business, but, if anybody's ever attempted to build in cottage country, just add twice the time and twice the price. I'm just going to make it really that simple.
Oh, absolutely. I mean, I can't imagine, getting supplies, through some of these roads. And, I have a great colleague who's in Honey Harbor in Georgian Bay, and, he uses a barge to get, all these supplies across those little lakes, onto little islands, and there's dynamite used. I mean, we're talking on a show right now where people are thinking that you pour concrete, you put some drywall up and you're done. But, in cottage country, we're talking about using dynamite to blow through rocks. You're looking at, getting supplies and machinery on these barges and floating across a lake.
And it's funny, I saw last summer a helicopter go over top with a generator to drop onto an island.
Yes.
It's one of those scenarios.
Yes, absolutely.
So, Dave, some final thoughts. So, let's close it out on a positive note. Let's trash some more of the Fed that I Canada. Interest rates. You know what? Everybody's here. We got a spring market, right? Tim's been very clear that, you know, we see a heartbeat. We definitely see a heartbeat. We're starting to see the odd multiple offer, basically from the neighborhoods that people really want to be in. Do you see the potential of some of these? Hello, all the top 5 lenders, please make sure you discount your rates because you're not getting any business.
That's a good segue. Yeah, look, the direction of the bond yields is in the right space for us to see some lower fixed rates for sure. When that happens, that'll be the interesting question. You're going to have some banks kind of puckering up a bit because of liquidity issues out in the States. So you could see a little bit of a liquidity premium, much like a risk premium being added in temporarily. But I think, we want to look at the main points here. We need inflation to come down. That's going to lead the Bank of Canada to stop raising rates, which they've seemed to have done. It's also going to lead for the bond yields to come down. That's important. We also we're going to need to have the United States not necessarily go through a crazy banking crisis, because that's only going to put undue pressure on our system as well. And obviously we need the time to work out, right? We are on that precipice of the spring summer market. It would be nice to have a bit more affordability to help some of the new buyers that are going to be entering the fray. But I think I really do believe we got a chance. I mean, if we can get that nice March print in April for inflation, have that down, see how the bond yields react over the next little while, there is still the hope that at some point in the maybe summer, May, June, we could see that elusive 3.99.
And I just want to add that, history may not repeat itself, but it definitely rhymes. I've said that saying many times on the show. And if you look at '08, when the U.S. went through a tremendous banking, and financial crisis, what stood tall was a banking system in Canada, and the way that we functioned, that just drove right through it. There were some scars, but nothing compared to what they went through, right? So, again, as this news that Dave has shared with us, that I 100% agree with. You're going to continue to see a longer spring market. We may not see, as the numbers get better, we may not see a summer lull. We may actually start to see more of a train kind of picking up some steam and moving. And when I say a train picking up steam, I don't mean like out of control. I just mean like it's just going to start, getting back to normal, if I can use that word kind of loosely. And then, a better fall going forward.
Yeah. All great points. And normal. Gee, Tim, I'm not sure we're going to figure out what that is.
I don't know what normal is anymore. Yes. It's like saying affordable.
There we go. Yeah. Wow. And on that note, folks, so that's a wrap this week for the Real Estate Talk Triangle. Thank you to Tim Sirianos and Dave Butler for being in the studio each month with me. Really a lot of fun today. And I do want to thank my producers. They keep it simple for me. Aiden and Omar in the booth. Thanks for doing what you guys do. I want to thank Ian Grant, at the headquarters there, making sure that we do keep it simple. More importantly, I want to thank you for tuning in and making us the #1 real estate talk show. And of course, I will be back next Sunday as usual. I'm your host, Todd C. Slater. You've been listening to Simply Real Estate right here on News Talk 1010 Toronto.